What's up, guys? Welcome to the channel. We're going to be looking at Bitcoin, Litecoin, and Ethereum and see where we could be going. Are we going to get to that $38,000 to $41,000 range, and will we get a massive bounce from there? Let's take a look at the chart, see what it's telling us. Don't forget, we have a free Discord group in the link below in the description. Definitely check it out. Let's get into it. All right, guys, as always, this is not financial advice, trading advice, nor is it investment advice. Don't forget, we do a free Ledger Nano S hard wallet giveaway. We'll be doing that on Monday. All you have to do to enter to win is make sure you subscribe to the channel, tick that notification bell, and make sure your notifications are turned on all. Smash that thumbs up and leave your comment below. I'll pick a random comment from a random video on Monday. All right, let's take a look at the Dow Jones. So we did get a nice dump. We've been watching this as a possible fractal for a big dump coming for the Dow. If that does happen, I think that'll drag Bitcoin down with it. Do I think it's going to shoot down in one candle? Absolutely not. This could be a long drawn out bear market for the Dow Jones. But as you can see over here, we made bearish divergence, lower lows or lower highs in the RSI and higher highs in the price action. Same thing over here. That is bearish divergence. Let's see what happens today if we get the Friday rally that you usually see in the stock market, or it continues down. But as of right now, this wasn't quite a bearish engulfing, almost, but not quite. So the area to watch here for today is going to be, let's put a label on this line. Was the old high back here? We did break down below. It's around 31,670. So keep an eye on that. The DXY is getting our bounce off of our wedge here. I know everybody's extremely bearish on the DXY, but I am not. Like I said, unless we get below this 89.21. As you can see, the fractals here are playing, these two fractals, these two falling wedges here. They seem to be playing out beautifully. We'll see if it continues, but as you can see, we've been talking about getting a bounce off of this wedge in the RSI. And guys, this is the 3-day. But it is getting that bounce there. Let's see if this can continue up. Obviously, the weekend's coming. So Bitcoin, if we do get that drop, will it happen over the weekend? And can we get, and how high could we bounce? We'll take a look at that also. But as you can see, the fractal in the DXY still seems to be playing out beautifully. We'll see what happens. Right now, we're playing on the 21 EMA. Let me zoom in so you can see that. On the 3-day, again, this is on the 3-day, and we're also going to take a look at a 3-day chart on Bitcoin and take a look at that bearish engulfing candle we've been watching. But right now, we're getting rejected on the 21 EMA and the 3-day, right around the 90.75. If we do break this, our next stop is going to be up in this range around the 92. And then, of course, we have the 200 EMA up here at 94. And guys, this is probably not going to shoot up super fast. And like I said, we got the weekend coming, and it doesn't trade on the weekend. And as for gold, we're almost to our target we put in November at about 1736. And again, if we do break this, our next target is going to be about 1647. If that breaks, it's just pure ugly. All right, let's take a look at the 1-hour chart. So this is the rising channel we've been watching, and I'm going to go ahead and take this trend line out of here from the wedge. And this is the rising channel we've been watching here, and we still have this target right down here around 40,700, and that's just the measured move of the break of this channel. If you guys been watching, we've been looking at this. I did put the Fibonacci extension on here, looking at this as a ABC possibility if you use an Elliott wave theory. So let's put, that's not the one I wanted. I'm going to put it in here and show you what I'm looking at. Now, this would be the bullish case. Where is it? Here we go. Looking at this as a B, C correction. If that's the case, we could go as low as around 33.6 or 38.6, and let me put a target in there because we're going to continue watching these areas. So let's put this in here. I like to put targets on here so you can get an idea how and why I'm coming up with them. But so I'm looking at this 40,700 and possibly 38,800 for ABC. If that is the case, let's zoom in a little bit and we'll go into the 4 hour and start looking at a couple other things too. But if that is the case, and it shows one more leg up, let's take a look at where that could be. Let me get this off of here. If we break back up inside this channel at any point, then it gets bullish again and we get support on it. And then we could be looking for 60,000 plus for our next wave. But let's take a look at this. We'll come down here, look at this as wave 1, 2, and this all being 3. And then we're looking at 4. Let's see, where could that possibly get us? If we came back up to retest the bottom of this channel again, would be around 60.23. So let me get these off of here, out of our way now. So that's what I'm looking at. If we do get a massive bounce here, now if this shoots straight down, we could just get a dead cat bounce. And there is a possibility we go lower than this, but I am looking for at least a bounce here. And if we do, and this is bullish, we could come back up to this range by the first week of March, somewhere in that range. So keep that in mind. Let's take a look at the RSI here, see if that's telling us anything in the 1 hour. And it is. As you guys know, hidden divergence is usually a continuation of the trend. And we are getting, if you look at this high here, and where we're at now, that is hidden bearish divergence. We're getting lower highs in the price action, higher highs in the RSI. Shows for some more power to come back down to this range. So, and as you guys know, if we look at the 4 hour, let's take a look at the bigger picture here. Now, again, this goes up to that, what was it, 62 range in March. And that would be retesting this thicker white trend line here. Now, if we look at this as a breakout, we're not going to look at that as a breakout actually anymore. But let's take a look at the very bullish case. So let's say we do come down here, get our bounce, and we break through that 62.4. How high could this possibly go? That would be the measured move of this broadening wedge here. Put this down. I'm actually going to change this up, and I'm going to do that right now while you guys are watching, because this is what I'm more interested in now. And let's just line this up. We're going to get rid of this, and we're just going to strictly look at this as a rising wedge now. I think it's safe to say this could be what we're looking at. So anyways, if this does come down to this range, we are getting a bounce on the 0.5 fib, and we talked about this yesterday, getting a bounce on the 200 EMA around the 44.8, and that's what we did. We got down to 44.1, but nevertheless, we did get support on it, and then we are coming up now. But we did get the 21, the 13, and the 8 all crossed the 55 EMA here. And when that happened, I remember being in Discord and telling everybody that people playing the 4 hour would short. Let me zoom in so you can see that. I do have an EMA strategy you can check out. I'll leave a tutorial up top. But when these all cross over on the EMAs on the 4 hour, right here, and you don't do it on high leverage obviously, but right here, this candle right here, open and closed below all the EMAs after they crossed, and that's usually a short position. Although we did go higher until all of them cross back up, and we have the opposite where we have a 4 hour candle open and close above them all after they cross. That would be your exit. But I mean, that's a safe one. You're not going to catch the top and bottom that way, but it's pretty safe strategy. Like I said, I explained it in the video. But as of right now, all of these have crossed. That is pretty bearish. Usually we can come up as high as the 50,300 again and test that 55 EMA. We have a 25 EMA at 49,127, 48,223 for the 13, and the 8 is at the 47.5. So I would look for a possibly we can get up there, but another break of this 44.860 range, a candle open and close below this 200 EMA, and then I do believe we'll continue down to at least our $41,000 target. But the 0.618 Fibonacci retracement is sitting right at 40,170 area. So right in this range, we'll probably expect another bounce, maybe come up and test this area again. But if we do break this bottom trend line here and get and come back up, retest it and get resistance, it could be pretty bad for Bitcoin. I do think though we will get at least another bounce off of here before breaking this. But once this trend line breaks, I would think it's safe to say that we're probably in a bear market. We talked about this yesterday when I explained I thought it was going to dump. Let me get this off of here. So we had lower highs in the price action, higher highs in the RSI. That was bearish divergence. That was what was telling us going down. That's why you want to stick around and look at the 3-day chart, because it doesn't look very healthy. But anyways, right now, as you can see, we made, let's take a look at this hidden bullish divergence, which is lower lows in the price action and higher lows in the RSI. But remember, I'd said hidden is a trend continuation, so it's less powerful when we're in a downtrend than it is in an uptrend. If we were in an uptrend and we got hidden bullish, it would be very bearish because that's the RSI resetting. But this could be just making more room because we are in a downtrend. And again, the regular divergence, it really doesn't matter what trend you're in. It'll usually follow, the divergence. But if you're in a downtrend and you see hidden divergence, it's usually a trend continuation. So keep that in mind. Anyways, if you guys are interested in trading, I'm going to leave a tutorial up top on how to use the margin on Prime XBT. By far my favorite exchange. You can trade all kinds of stuff with it. Forex, gold, silver, oil, S&P, Dow Jones. So you can dabble in a little bit of everything all on one exchange. You can also set up multiple charts. If you guys are interested, go ahead and check it out. You can use my promo code SAVY50. We'll get you 50% on top of whatever you deposit as a bonus. So if you put in 1 Bitcoin, you get a half a Bitcoin as a bonus to use towards your margin. You can't pull it out, but you can use it towards your margin and keep the gains. Savvy25 will get you 25% off your fees. Now let's start taking a look at the bigger charts, and we will run over that 3-day chart, and then we'll look at Litecoin and Ethereum. But we have the fib channel here, and we've been watching. These are where we get rejected at the highs. So if we're able to break up past this 50, it all depends on where it hits, but if we get back above this fib here, which could be around the 62,000 depending on if and when we get up here. If we break up here, we got to be careful, because back here we wicked above it but came back down. If we do come back above it, get support, everybody's talking about that $200,000 Bitcoin in this bull run, then that could, whoops, let me back that off. That could be a possibility if we can get above this fib. But until then, I don't believe, you got to play the charts as they come. Everybody is calling for these crazy numbers, and then you get new people just buying and expecting them. Be careful with that, guys. But if we come back down to retest this fib here, could be, depending on how quick we go, could be around the $30,000 range. But if we waited till June, as you guys know, I've been watching for June for our next low, then it would be around 36. If it had a bigger dump, could be around 20,000. And there's still much lower low, guys. Remember, nobody knows for 100% where this is going, so don't put everything into, a huge number, either high or low. Just be careful. Let's take a look at the 3-day. So this is a 3-day. As you can see, higher highs in the price action, lower highs in the RSI. That is bearish divergence, and nobody was talking about it but me. But if we look at this 3-day, this is a bearish engulfing candle. The wicks both engulf the wicks of the candle before it. The body engulfs the body before it. That is bearish engulfing, guys. That's a pretty bearish sign. We talked about it yesterday. If we dropped below this 46.8, we were going to come down and test the 13 EMA. And again, guys, the 8, the 13, the 21, the 55, and the 200 EMA are the ones you want to use. And as you can see, we got that bounce there. The next time we come down and test this, which could be, you know, this week, next week, but if we do break below that 43,850, and this is going to move as time passes, but as of right now, it's around 43.9 to 4,400. And if that breaks and we start closing the candle below this, then we're looking around the 39.8 area. And then that could be the big bounce that we're talking about. And could that get us to new all-time highs? Possibly, but it doesn't have to. It could just, you know, get up to that $53,000 to $55,000 range and continue down. Remember how tops are formed. We're going to talk about that also. But the next stop after that, and again, this is going to rise, so it could be around the low $30,000 range. If this 21 EMA breaks, then we'd be looking for the 200 EMA. That could be very, very low. We'll talk about that if the time comes. But we're also talking about this Elliott wave structure here. If we've topped out, we could be having a bear market here. I know that's not the popular opinion. I don't care, because you got to look at every possibility. We do also, if this wave 3, which is in the white here, let me get this out of the way, could get that higher high. If that's the case, then this would only be 1, 2, 3, and of course we'd have 5 waves in the third wave, and we could get that June low to that 45 to, obviously we already hit 45. We could go as low as, with this still being a bullish count, we could go as low, as long as we don't go below this wave 1 here, which is around 15. Not to say it's going to go down there, but if that breaks, you know, if we did start a bear market instead of just a correction, we could be, you know, if that breaks there, we could be seeing much lower lows. But in the bullish case, we could go as low as the Fibonacci golden pocket zone right here is about 23.6, somewhere in that range. And then we could still have one huge rally back up to that $60,000, $70,000, $80,000 range. Who knows? We'll obviously make sure you're subscribed. Make sure you hit the like button. I can't stress enough, guys. Smash the like button. It really helps the channel out. But yeah, there's still a bullish case for this. I mean, it doesn't have to go this low. It could get that bounce, like I said, 38,000, which would also line up with the 0.382 fib. But anyways, this is what we're going to be watching. We are going to be trailing it, see what's going on, so I will be updating you. This is just another way to look at the bearish case, guys. This is just to throw caution out there that things don't have to just continue straight up. We still are favoring the bears a little bit in the funding rate, and this is just a speculation, and it also will match up with some other stuff we're going to look at. But if this was the top, speculatively, we could form some sort of a head and shoulders here, and depending on where the neckline was, if it was right at this point, would be around the $9,000 range, and that is an 84% correction. Now let's take a look at why I say 84% correction. That is what we did back here, and these are fractals here, guys. So far, until proven otherwise, is still a fractal here. We have rising channel. We break out, we go parabolic, we come back below the rising channel. And I've showed you guys this before. Stick around, we're getting into Litecoin and Ethereum next. But I've showed you this before. This yellow dotted line, this is back in 2017. We broke back below the second touch of the rising channel. Now let's take a look at the measured move of this channel, or this triangle at the top. And remember, we talked about triangle tops being formed to form tops. We get a big sell-off, and them same people buy back here, get everybody bullish again. They sell off again, they buy back, and then once we break the triangle, that got us right to our low. Same exact thing happened back here in 2019 from the second touch on the rising channel that we broke out of, came back down, dipped below it again. We had the parabolic rise, formed our triangle, the measured move of that triangle, got us to our lows. If that is to happen again, and to think it's not possible, you cannot go into markets automatically assuming it's for sure got to go here, for sure got to go there. That's craziness. Just don't get sucked in by it. But anyway, this here was an 84% correction. This was a 72% correction. I do think we're going to see another huge correction. Does it have to happen here? No. Like I said, we could go up to these higher levels. But if we did happen to form a triangle in here, and just let me explain, guys, it doesn't go straight down. But let's just do a sample of what we could possibly see. We could see something like this. Come back down here, get everybody bullish again. It's going to the moon, and then drop back down again. And again, this is not showing you exactly how it's going to form. I'm just showing you the possibilities. This is pure speculation. But then we come down, get a bounce, test the top of this a couple times, come back down. These are long and drawn out, guys. This could be years. Nobody knows. But anyways, if we broke back below this, and if we did come back below this line at some point, there's that $88,000 or $85,000 to $90,000 range, and that is an 84% correction. Again, this could last 2 years if, in fact, it is a bear market starting. Again, nobody knows for sure, but you need to take in, you know, both the bullish case and the bearish case so you can kind of be even keel. Don't be overly bullish, and if we are in a bear market, you're wrecked. Don't be overly bearish. Make it even keel. You've got to try to keep your emotions out of this stuff. Emotions will get you smashed. There's a lot of money to be made in these markets, especially if you trade it. Hodlers looking way long ahead can do well, but like I said, if you get a big bear market here, everybody that bought up here is just going to watch their portfolio go to, you know, crap. And the markets move up and down, guys. When there's targets like this, that doesn't mean you're going to see this next week, next month, or even next year. It could be 2 years. Markets do not work like a lot of these guys push. You know, when we are in a rally or a dump, it seems like it's just going to continue forever, but the market has to release and has to, you know, give some back, pull some back. It has to do that. People are going to collect profits. People are going to buy. People are going to sell. It's markets, guys. Anyways, let's look at Litecoin. All right, so looking at Litecoin, we're looking at this as a rising wedge now. We have our support and resistance at around 183, 184, and then another one at 147, and that's just the peak over here. We're looking at this as an Adam and Eve, and the measured move of the Adam and Eve gives us that 271-ish right here. Wait, I don't know what that... Oh, yeah. Gives us that 271 target that we've had up here for a while. We did not quite hit it. Let's zoom in here a little bit. We're not making bearish divergence yet over here, so we could still have come back down, test the bottom of this wedge, just like in Bitcoin. Probably get a nice bounce. If we reach new all-time highs, we could go higher than at 241, but if we break that area, we could be looking at a possible $384 Litecoin, maybe even higher. That's being conservative if we break this top trend line. But let's say we come down and break the bottom trend line. What could we be looking at? And again, it doesn't mean it drops straight down. This would be over years and fall with Bitcoin. Could be looking at coming back down to these ranges. Not in a day, not in 2 days. Let's just draw that out too so you understand. These are daily candles. So let's say we come down here, get a bounce, get another bounce, get up, get everybody bullish again, come down, break down below. Do you see what I'm saying? It takes time. It's not going to be, you're not going to get rich overnight. You're not going to go broke overnight. It's a slower process. It might seem fast when there's pumps and dumps in the middle of them, but keep your emotions in check. You know, on the bullish case, if the bullish case happens, that's usually going to be a little bit quicker. Let's say we get a bounce here and it goes just the opposite. We get support back up here, come up here, test that a couple times, and then blast off. That is a possibility. So you just got to keep in mind, guys, anything can happen. It doesn't have to go one way or the other. So this is the channel we've been watching, and this would get us down to, we did break back below it. We talked about it yesterday, and I showed you in the EMAs, they were crossing looking bearish. Right now we're getting support on the 21 EMA, which is around 1492. If we close down below that, or start opening and closing below that 1492, the measured move of breaking out of this rising channel is around the $940 range. And that should line up pretty good if it happens within the next few weeks, right around March, somewhere in that time. But if that breaks, it could get pretty bad pretty fast. But again, it doesn't have to happen in a couple days like this here. These are daily candles. Like right here is over a week. So if we come back up, retest this again, come back down, test our 14,000 area. If we do break that, then head down towards, you know, our 94. And then it could blast off, get a new all-time high. Like I said, if Bitcoin gets that 38 and possibly even low 30s. But just be careful, guys. Anything can happen. Don't go listening to one person and then throwing all your money in and think you're going to win. And again, be safe. Always use stop losses. Never put in more than you're willing to lose, and you'll be all right. Learn risk management. That's the most important thing. If you guys enjoyed the channel, check out my wife's webpage, anchorimage.com. A lot of cool stuff on here. She makes it all herself. It's all quality stuff. She can put pictures on any of this stuff that you want. She also has a crypto section. But check it out. Thanks for your support. Don't forget to subscribe by clicking the CryptoSavvy logo above my head. Smash that like button. Leave your comments down below. Let me know what you think. Do you think we are going to see new all-time highs again? Do you think this could possibly be the bear market? I'm not saying we can't go back up and test the high again. But anyways, check it out. Let me know what you think. And I'm out of here, guys.